the 28th of February, right? Today I'll talk about trade crossroads, analyzing the impact of new US tariffs and global markets, and as well as the domestic market, okay, the tariffs on the global market. Now, the recent tariff announcement by President Donald Trump are poised to have significant economic repercussions affecting both the US dollar and the stock market in general, the US stock market. These measures involve imposing tariffs on imports from European Union, Canada, Mexico, and China, which are some of United States' largest trading partners. So first of all, let's look into the detailed analysis on tariffs and their impact, right? Now, tariff implementation dates. So far, Canada and Mexico, President Trump has indicated that tariffs on Canada and Mexico are set to begin on April 4th, 2025. Okay, this is right hot news. It came out last night. This decision follows a period of negotiation concerning border control measures related to undocumented immigration and fentanyl trafficking, right? Trump has stated that drugs continue to enter the US, which has led to the imposition of tariffs after it had stopped for a while, and we were looking, Canada and Mexico initially thought that everything was okay if they started protecting their borders. That's why there was a delay. But somehow Trump has said that drugs continue to flow into the US, but not giving any proofs whatsoever. And he just said, because of this, I am imposing tariffs on both Canada and Mexico starting April the 4th. Now, there's still time for negotiations. We have about a month until it hits, but nevertheless, this announcement alone has impacted, the stock market and the US dollars as well. Now, as for China, an additional 10% tariff would also be imposed on China on the same date, which is April the 4th. Okay, so this was all announced yesterday. The day before, on the European Union, the tariffs targeting the European Union are also scheduled to commence in early April 2025, but no date has been given so far. Trump has specifically mentioned a 25% tariff on European cars and goods, citing significant trade imbalances and policies that disadvantage US businesses. He said he just wants a fair deal, and Europe hasn't been fair. Okay, he has been complaining, it hasn't been fair at all. Now, this move has sparked immediate responses from European leaders warning of potential retaliatory measures already, right? So next thing, the overall thing, we also still have the reciprocal tariffs. The April 2nd date will remain in full force and effect. A study schedule would be released on April the 1st, and from there we will be able to see each and every country, how are the tariffs like, okay? And we would also know if Australia would be hit or not with these tariffs as well, right? So this is the update so far on the implementation dates. Now, the second thing is the economic indicators and historical context. Now, what we have right now is an inversion of the yield curve. Recently, the bond market witnessed an inversion of yield curve, a traditional indicator of potential economic recession. Now, this particular indicator has a very, very high accuracy, okay? But we shall see, even though it has like 80+% accuracy, there's still a chance that we might not see that recession coming. But let's see. This economic signal where long-term debt instruments have a lower yield than short-term ones raises concerns about future economic growth, particularly in light of the proposed tariffs. So basically, if if you want to keep something for a longer term, you should get a better yield than a shorter one. But this is the other way around. That's why we call it an inversion of the yield curve. So that's what's happening right now. So how is this most important? How is this compared to Trump's first term? Okay, we heading towards something nasty, right? So comparison to Trump's first term, during the President Trump's first administration, similar tariff measures led to market volatility and strained international relations. The current scenario mirrors those developments, suggesting possible similar outcomes for the US dollar and stock market. Past experiences showed a temporary strengthening of the US dollar due to a flight to safety by investors, while equity markets respond negatively due to uncertainties in global trade. Okay. Now, for a more reflective research on this US dollar stock market and other asset classes, stay tuned for the next update. I will review to you all, and you can see, we are go into detail on that. Okay, so look out for the next report, right? So this is what we expect: strengthening of the US dollar, with that, which I've already said already. If you look at the charts, that this one will come down first, and then after that we'll be looking for it to move up. And we have already started seeing, after the US Trump announcing the tariffs, right? The US dollar spiked yesterday. Now, future economic outlook so far: impact on inflation. Tariffs generally lead to higher consumer prices, which could exacerbate the inflationary pressures already present in the economy. This is particularly relevant for imported consumer goods and components used in manufacturing within the United States. Now, of course, you're going to have strained trade relations because of the impositions of all these tariffs upon the countries, trading partners of the US. So the proposed tariffs could deteriorate relations with the key US allies, affecting not only economic but also political and security corporations. Now, the EU has already signaled readiness to respond firmly to any new tariffs, which could lead to a cycle of retaliatory measures. Okay, so expect that, i.e., if to making things in a straight way, trade war. Okay. So for the stock market reaction, the US stock market is likely to experience increased volatility. Historically, sectors relying on global trade, or those that are significant importers of affected goods like automotive, and agriculture, are particularly vulnerable in such trade conflicts. Okay, so as a conclusion, the introduction of new tariffs by the US on its major trading partners is a significant development that could potentially disrupt the current economic stability. Now, based on historical precedents, the short-term impact on the US dollar might be a strengthening due to its status as a safe haven asset. However, the stock market and long-term economic prospects could adversely affected by the reduced trade volumes and increased cost of goods. So the inverted yield curve is an harbinger of economic slowdowns or potential recessions. So if a trade war significantly harms the US economy, leading to reduced economic growth or recession, the confidence in the US dollars could weaken, i.e., the US dollars could come down, which can lead to increased investments in gold as a safe haven. Okay, so this the things. So short term, we can see the US dollar strengthen, but if it this is not addressed well, that could reverse as well. So the extent of the impact on the US dollars would depend on the severity of the market crash or correction and the perceived longer term damage to the US economy. Okay, but like I said, the stock market is a very, very important thing to Donald Trump, and he is not very keen to see the stock market crash. So he would do his best to ensure that the stock market could eventually recover as well. But let's see. Okay. So anyway, stay tuned for the Monday's report. I will give you comparisons on what happened in the past when the Donald Trump imposed these tariffs, and then what happened next, okay, to the stock market and other asset classes. So with that, that's the report for today.